I'm going to start off with the dollar, because I think what is going on in this dollar is going to impact the markets. You can see we've got this structural breakout in the dollar here, so I'm looking for some further recovery, and I think if this, the higher this pushes, the harder it squeezes US stocks, but the more slack it gives to European stocks. So if we see this pushing up, then that could have an inverse effect on US stocks, at least in the short term. And I'm going to draw you out patterns of targets for the US indices anyway, and of course the European indices. But what I'm seeing on this one is this. I'm seeing, let me just get the pen. What I'm seeing is you've had the last three-wave recovery failed at 94.5. This is the US dollar, and then we started this wave pattern down, and we really collapsed down here until we sprang out. So this is actually a very bullish, this pattern here, believe it or not, is actually very bullish, because it gets very tight, and then we've got a nice spring load. Once they've done with it, and you get this bottoming pattern, and we start to have a reversal pattern, then you get quite a nice three-wave spring. Now we've had a three-wave spring before. Okay. Good to see you. We're at Mazena. Good to see you. Multitask away, because but plenty of time to look over the recording. Okay, so we've sprung out, and now potentially, normally once you get a breakout like that, all pullbacks are to be bought until you get a reversal signal. Let's just start to put some meat on this bone. So if we can now subsequently hold this, if we dip back into this 90 level and hold, then I think we can wave up to at least 92, which is going to potentially, like I said, put some stress on US stocks. If we at some stage soon close above 92, then that really is a bit of a dive for cover, risk off environment if we start to break up back up to September levels. Okay, bear in mind in this period the US markets were very bearish, and we saw a winding down of the US markets. Okay, so if we see, so you can relate how that might well do the markets a disfavor. Now, if we see, let's just want to switch to gold for a second. I've been very bullish the gold. I've been patiently waiting for some decent pullbacks. This pulled back into the Asian Open at 1805 and has not dropped back down. So that's disappointing. So I'm hoping that this can pull back. Now, the reason why I've dragged this up, this is a daily chart of the gold index. If, the physical gold, if this continues up with a rise in the dollar, that's incredibly bearish. That's very, very bearish. Normally you get a divergent relationship. Weak dollar, strong gold. Strong dollar, weak gold. And that's a healthy relationship, but strong dollar, strong gold is very unhealthy. All right, so I'm looking for it to come bang into 1900 at some stage, and then break out, and then get to 2.5. So I'm still patiently waiting for a decent pullback. So let's now move on. If we now go back to, let's start looking at the Dow Index. You've got this structure, very bullish structure index, very structure on the Dow Index. If we can punch through here today on this overhang from the Friday 8th and the January 14th, that's very bullish. And we could potentially come and see 31.5 in the back end of this week and into next week. However, if we then punch into this congestion up here and can't pull higher, this could then drag the markets down. So hence the reason why, if we do see any sell signals up here into this structure, then we need to be very careful. All the time this is closing higher and the pullbacks and this trend line is holding, then we're risk on. I am long this market, but we'll talk about that in a minute. Okay, so that's what we've got in the Dow. Let's look at the Nasdaq. Nasdaq has pushed into new highs, I think. Yeah, we've made a new high on the Nasdaq today. We've pulled back from that new high, but it's extremely bullish. And this is very, very shallow pullbacks. Deep pullback into the first main day, and we've hardly looked back. So if I then put the structure on this Nasdaq, because what the Nasdaq does, the rest of the market follows. You hear me say that all the time. So if at any time soon we start closing lower, watch out. In the meantime, there is a divergence here. If you see how this histogram is making a lower high, potentially got a turning of the averages here. So we are at quite a crucial point. No reason to sell this market, no reason to bail out of any stocks you got at this point, but just be careful. Elliott Wave, let's have a look at Elliott Wave, because I think that always makes life a lot easier. So since we've had this, where's the best way of kicking this off? Let's kick it off from here. So you had a 1, 2, 3, 4, 5. 1, 2, 3 wave correction. The 3-wave correction took us back to. Let me draw that again. This tool sometimes doesn't work properly, so let me draw that again. One, 2, 3. So this move in the 4th of January potentially kicked off another 5-wave move. 1, 2, 3, 4. So if we complete here, then we are due at least a pullback, at the very least a pullback, which would be, given that we got the divergence and potential strength in the dollar, it's possible that, that we could be on the verge of seeing some kind of pullback, which is not uncommon in this time of year. This sets a good precedence for certainly the first part of 2021. Earnings season has got off to a good start, but we are extended and stocks are very expensive, so that's the reason why I'm just pre-warning you. But if we were to close above this level here, close above 2200 up there, then obviously we can go into another phase. But just to warn you that we are extensive, we are expensive, and yeah, this Nasdaq has come a hell of a long way. It did 48% growth last year on the back of a lot of issues in the global pandemic. All right, so let's now switch to Europe, and then I'll gather a pace and start looking across stocks. Let me just manage one of my trades a second. Okay, I'll show you some of the stocks that I am about to look for pullbacks in. Some of the stocks I'm in already, and my overall preference for sectors, etc. Right, let's look at Europe. All right, then the Nasdaq has been, sorry, the DAX has been very reticent recently. So we are struggling with just at these 2020 highs. In fact, we are, if I pan right back, we are just resetting on all-time highs. Yeah, I definitely run the trading room. I don't trade the DAX anymore in the room. I don't trade the DAX because it's too slow. I find it too slow. It's too draining to run 2 sessions a day as well. Actually, it takes a lot of concentration and preparation. So I backed off the DAX and I just run the room for the Dow, and I start suggesting stocks in that room as well, stocks and commodities. Okay, so on this, that's a month. Let's go to let's go to a weekly. Yeah, so you can see on this weekly DAX, sitting, just grappling with 2020 highs here, and we've got a trend line coming through. Let me see. In actual fact, let me draw this again. So we look as if I think we can head through 14,000. I think if we pop up through that and then subsequently close lower, be careful. If we close under this 1850 and stay under the 14,000, then obviously that is not healthy, and this could pull back as well. It's quite a deep sell last week, so all we're doing at the moment is climbing back into that sell area. So if we subsequently can't hold this week and even close us under 700, then this is going to come lower much quicker. So let's have a look at, we've got a 1, so we had a 5-wave move up here, and now we're having a 1, 2, 3 wave. So you can see how important this area is, as obviously it is with the US markets as well. So there's divergence in this weekly chart also, as you'd expect. If I just drag that up. Why is that not going up? Won't let me take it up for some reason. You can see the divergence up there as well. So this market is on the edge, and we need to continue to punch higher and break these highs in this market. Right, let's look at the Ftse, and then we go into, you know what, I don't think the markets are actually bothered who's in power. Yeah, obviously the markets are looking for what Mr. Biden has put forward, or President Biden now has put forward, this another $2 trillion stimulus package. So assuming that gets put through, that's going to potentially sustain the markets and cap the dollar. But for how long? We have at the moment the markets are flying in the face of some very weak data. US job growth has significantly slowed. US retail sales were very poor last week. Poor, I think was that monthly figures or quarterly, I can't remember. So if we continue to see this market flying up in the face of weak data, then I think when the correction does come, I think it could be harder and swifter. Anyway, let's not get distracted. Let's stick to what the markets are showing us at the moment. So you can see how this weekly Ftse crashed right into this main 6950 resistance. So at the moment it has just done a 1, 2, 3. So we completed a 5-wave move. So it's characteristically bullish to expect to see a 3-wave correction. So if we see a 3-wave correction and come back to this breakup area of 64.80 and hold, then I think then the next 5-wave move could take us back up to these highs. So I think, like I said, this is typical of this time of year. And I'll show you some examples of that in a minute to back that up. Okay, so yeah, this is a big area. So this is only the first touch since this breakdown. This is only the first touch of this resistance area, and normally I wouldn't be at all surprised to see this knock on this door for about 3 times before this finally breaks up. So in the meantime, I think we are potentially going to wind down some of this area, so if we can come down here and hold this, then this is eminently viable for into the second quarter and third and fourth quarter of this year. Okay, so I'm looking longer term. I'm expecting this to come back here over the next sort of 2, 3, 4 weeks, and potentially juggle around here, and then as we come into into March and April, and maybe we can get up here into May potentially. Sell in May and go away, and then see another pullback here. So this is an area to be cautious of, but potentially in the coming weeks this will give us an opportunity to buy some pullbacks. Okay, so yeah, we've had an incredible amount of stimulus, and central banks are still chucking a lot at this market. But if you stick, okay, if you want to talk about fundamentals, then I think the biggest issue is the price of stocks. Some of these, in some of the scans I'm doing recently, it's amazing, particularly in the US, how many stocks are flying that are not even making a profit.
Mike, I was just reading an article in Wall Street Journal. The penny stocks have done like growth of 60% or something in the year.
Yeah. I mean, there's some incredible stocks that have. In fact, some of the scans I did were penny stocks, and yeah, they're doing sort of huge flips off of decent support, and for what? I think they're all. It's a very frothy market, is what I'm trying to say, in a nutshell. It's just staggering just how many stocks are either not making a profit yet, so the market is very bullish and there's a lot of cash sloshing around trying to find a home. It's Tina, isn't it? There is no alternative. If you leave, there's a lot of cash sloshing around, no point in leaving the bank because interest rates are apparently 0. So everything's, the bond market will look is not something to give decent returns. So a lot of money is filtering into these markets and creating a lot of froth and some potentially dangerous conjuncture points, apexes in these markets. But this is incredible lagger, isn't it? I mean, you look at this complete opposite. Even the Dow is it's made a couple of new all-time highs over the last few weeks, and this Ftse is just stuck. It's shown a lot of life. I think a lot of people are more and more interested in UK stocks because of the way at the expense of investing in the US. So yeah, I think these pullbacks are to be bought. And if you look at stocks, as we now start looking at some UK stocks. If you look at the likes of anything, even something like BT, yeah, this is up from a low of what 95, 94p, and we've hit nearly 150. And to me, I've been talking about this one all summer. All pullbacks are to be bought on this BT at the moment. All we've done on this weekly chart is just done a nice little sort of three-wave move. That's all we've done. That tool's gone wrong again. So I'm looking for good value, profitable stocks in the UK. Just very cautious with stocks in the US. So let's do an update on UK stuff. So as you can see in the Ftse, these are weeklies. Let's go to the dailies. We're talking about pullbacks since for the last sort of week or two, last couple of weeks, purely from the point of view that a stock like this really ran up really well into November. And I think we are due some further pullbacks. This is, if you're in this for the long term, stay put. Yeah, come to that in a minute. We had a really nice 1, 2, 3, 4, a huge wave up here on this breakout pattern. So a nice apex down here in Lloyd's, and this is common with stocks like BT and so on. BT, the chart looks very similar for BT. So, and then we've had a 1, 2, 3, 4, 5, 1, 2, 3 wave push higher. So this is all working out, but I just think we need deeper pullbacks. If this is really going to start to climb back up and break this high, then I think we need further pullbacks into this sort of 30, 32 level before this can pick up and get some decent support and then move forward. So if you're in it for the long term, stay put. If you're looking to get into this, my suggestion is you be very patient and see if we can get as low as 30p on this Lloyd's. Let me call up my list. Right, so we've got looked at Lloyd's. Let's look at Standard Chartered. That has pulled right back already. So this is, you can see we've got very hot up there at 517. We've seen a low of 458. I still think if any subsequent highs here could be sold into until we've come right back to a better footing on that one. Again, if you're in it for long term, stay put. If you're looking to get in it, I'll be very patient and look for something like I would look for 420, 425, somewhere between 420 and 430 if you want to get into stock like that. If you now look at Barclays, that's already hitting decent support. So if this is a bull flag, we may dip under here. If we hold this 140 area, and we're at 146 at the moment, so we're not even at 140. If we dip a little bit lower and hold, then I think we can start to crank up through to 160 plus. If we close underneath here, that's really bearish. I think we'll drop to 135 quickly and maybe even come out to this breakup area. So some of these UK stocks are sitting up proud but not moving. And whenever a stock gets stuck, it's normally a time for a good healthy pullback. Let me come back. Let's go back to the indices for a second, because I just want to make the point about what happens. Yeah, I just want to make the point about what happens normally this time of year, normal sort of cycle of this year. And let's go back to the Dow. Yeah, I'm looking at Ftse stocks at the moment. Yeah, Ftse 100. If you go back to, let's go back to January 19, because we all know about January 20. Let's go back to January 19, when we had a normal functioning market. Yeah, so here we are. Where is, let me make it, so let's mark up January. Right, January 4th or 2019, we came out the gates really nicely. Pushed up higher into the middle of January, pulled back in, sat there and did nothing until the end of January. And then we went on a little run into March. And then once we got to March, we just did some very small wave patterns. And then we did a deeper pullback into the summer. So, yeah, this initial burst into January 19 was met with a lot of sideways action and pullbacks into the second half of January. So, I mean, this was a very mild, very meek pullback, but I think I think the way in which the Ftse is looking at the moment, sorry, it's the Dow, isn't it? Let's go back to the Ftse. On the daily chart, I just think this is too far too fast. And if you look at this 1, 2, 3, 4, 5, so completely, there's the daily chart. So we're already in an A wave pullback. If the B wave is meek, then I can see us pulling all the way back to here. If, however, obviously there's no reason to sell this market at this stage. If we start closing above that level, then hold your hats, because we could break 7,000 and pop up and start climbing towards 7.5, etc. Okay, so this UK market is not overbought in anywhere like the US. It's the US that's got the froth. And so it's the US markets you've got to be careful of, and a lot of these stocks in the UK are, at the moment, particularly the good quality stocks, appear to be well worth pullbacks, buying pullbacks. Look at that IQE. Yeah, really nice. And this is what, yeah, we had this one lined up. I talked about 75 on this. So I had this lined up for 75, and that's currently 85. And this is always the big question, isn't it? Buying pullbacks. I'm always saying in my trading room, I'm always saying I'm not chasing the market. If the market breaks up, I'm not chasing it. And if you look at the way in this one, it's a slingshot, isn't it? We get all these moves to the upside on this one. Gets really hot up here at 58. So it pulls back. And it pulls back to breakout areas. So we do another break up, and it pulls back to a higher breakup area. So it makes a higher low. And then, so you get a breakout pattern here. If you're very patient, you keep buying pullbacks at 50, 52, and then you go on another run. You go on another walk up in the markets. So 66 was resistance back here in December 7, December 15 it became support. So here we are from 66 pushing up into 85 plus. So this is a really nice breakout pattern, which looks as if it's got the potential to go back to a pound. So if having broken out, that is potentially buyable at 80. This is one still to watch out for, because at the moment that still looks as if that's got a lot of energy left. Let's put volume on just to qualify that. Oh, hang on, I've got volume on there. I've just got to put it back. Hang on. Yeah. So you can see that as this was pulling up, we were pulling up on increased volume. So there's your confirmation. And we started getting increased volume here as well. So there's your confirmation. If you go up on low volume, then as you'd expect, we went up here on lowish volume, and the volume tailed off. You got a sell signal there on the 13th of August. Anyway, this is a really nice. We've broken out on volume. So anybody interested in IQE, then see if you can see if you can get in on 80. I'll tell you what, if you bought 80, get your stop under 75 with a target of 100 or more if you're even more bullish, and see if that can work. And there's no guarantees. Don't trade with money you can't afford to lose. But on the face of it, that that could give you a nice little extra profit. Yeah, I mean, it's closed very well. It's closed near the highs. We've been to 86 and it's closed near the highs, so that's really good. Right, let's go back to the UK list. Let's look at the other ones. Right, let me get my UK list. I tell you what, this is one I've now Andrew pointed this one out. Andrew's not here today, is he? Where are you, Andrew? Right, okay. This is one Andrew pointed out, and I have been buying into. Right, if I can pull this out. This is Hammerson. It's having a really rough time. I did a rights issue which diluted the stock. Now, so we've already pushed back to 28, and here we are at 22.5. There's a lot of red on this chart, as you can see, and it's very, very shallow. The volumes are not great, so you've got to be, if you are going to trade this, be very, very careful. The breakout area was 17.5, so it's possible, if we continue to close lower, that this could find itself coming back down to at least 17. So, but nonetheless, it's an interesting stock. Right, now, let's look at shout out stocks you want me to look at. Now, energy on the Nasdaq, energy was the worst. Was one of the worst performing sectors on the Nasdaq last year. So it's overdue a pullback. Now this is we're looking at cheapy stocks, but only trade these if the volumes are picking up, and only trade them with money you can afford to lose. So this was down there at 1.9. We're currently just tested nearly 4, and this is SENX, Serenus Energy. Yeah, hold on. I can't find my UK list, so can you start shouting out, Yoji, what are you looking at? What are you in at the moment? Let's go. Legal and general. Now, considering what's going on in the insurance industry at the moment, this is holding up. This has got real relative strength. Again, we've had this huge push out in November. At the moment, these markets are, UK markets are very stubborn, and we're not getting significant pullbacks. So if you're, I'm going to be very patient to, I traded this one, got out, took profits, and I'm waiting to get back in, but I need at least 248, and this is sitting up and not, I think we'll see it, so put that on your watch list. Ocado, yes. I'm not a big fan of Ocado. It's quite an expensive stock, but there's no the pullbacks. We had decent pullbacks in November. So we pulled right back to, so we broke out here in August and went to 29.05. Then we broke back down here in November. And we consolidated and sat here from the 10th till the 10th of November to the 14th of December, and then broke out. Whenever you get a stock that's broken out, it's much harder to suggest what to do, because we've got this, particularly on this one. I mean, my preference is not. I don't like. I think there's much better stocks out there, and I don't think that's a good stock for me. It doesn't fit my trading plan, my style of trading. But nonetheless, it is a breakout, and pullbacks are at the moment getting bought. But could we go up to 29? Could we go back to those August highs? Yeah, we could. It's a good stock, but not something for me. HSBC. Back to the banks again. Yeah, it's stubborn, isn't it? That's another stubborn one. We're getting really shallow pullbacks, and we've got a gap down there at 384. Personally, I would wait for a gap fill. You bought some Legal and General today, right? Okay. Oh, it doesn't do insurance anymore, right? Okay, I'm out of. I always knew it as an insurance company. BVIC. Ah, that's good. That's interesting. That's coming to major support. That is a really interesting stock, and because if we break, if we close back above 832, that could get back to £10. That's a really nice pattern. That's where the probability of this going back to £10 is good. It's very good as long as we any pullbacks from here are getting bought. So we come back to this breakup area. Whenever you, this is the kind of trade I like. If you get a stock that breaks up, don't chase it. It's a boomerang. It's trade to me. There's the big move, and there's 3 waves to the upside on there. Then you get a sort of effectively a 1, 2, 3, and another 1, 2. So this is a very bullish pattern. However, if we close under 740, then that's in trouble. But in the meantime, that looks good. Okay, yeah, thanks for showing that one. Yeah, okay. So nice one. And so let's look at some bellwethers. EasyJet. I think that's incredible. Given what we're seeing with travel restrictions, I'm amazed that's holding up. Chewy. I'm going to zip through these charts. Wow. Yeah, there's a lot of people booking holidays. Now the vaccine's really getting out there in force. A lot of people seem to be just booking holidays. I hope they are. So that's broken out. So that had 350 was good. It's not for me. It's not a sector I'm going to buy into, but that is definitely holding. Let's look at the oil sector now. Let's look at BP. Holding up. It's very shallow pullbacks. Shell. Very shallow pullbacks. Holding up. Not dithering at the moment. And let's go for the cheapies. Holding up, not pulling back. I mean, oil itself, let's look at oil itself for a second. Yeah, I just sold some Dow at this high and it's drifting back. I didn't short it, so I took some profits. Oil. I think it's vulnerable up here. I think it's vulnerable. It didn't, after we made this 53, after we made that 54, we've not had a significant not had a really good pullback. In fact, 15th, last Friday, that's a sell signal. So we're just retracing into a major area of resistance. So I think this is overdue a pullback, and I'm looking for 48.30 at the moment, and so I'm not touching oil. It's too expensive for me. I do like trading oil. Yeah, good question, Mark. Thank you for that. Yeah, I will email everybody with a Telegram group. And so that we can all exchange ideas on that Telegram group. I will email that with later on after I finished, and then I'll make a list of everything we've talked about so we can do updates. What was I going to look at next? Let's go back to my list. Anybody trading US stocks? Let's look at some let's look at retail. So again, that's very bullish M&S. Let's look at next. Where's next? It's looking vulnerable to me. I think there's a volume issue here. We're coming up with potential diminishing volume. Okay, we've had a lot of buyers who've come in on, who've bought these dips, and obviously a fair proportion of them sitting on that stock. But would you want to buy that price? I personally, it's broken out. Once we broke above 73.50, so we look really bearish here, and then we gapped up. So incredible stock. Yeah, we have very low volume, and then we just gapped up. That must be earnings, surely. Alibaba, yeah, I was looking at Alibaba today, so it's interesting you should mention that. Yeah, this is look how this formed a base here. That was a gap fill. There's the gap. So we come down to fill the gap, went down to a deeper level of support, which we saw in June. So this went all the way back down to June levels. Incredibly bullish chart. That's a really nice zonal breakout pattern there. So it's now pretty hot. It's come from 209 to 270. That now needs to pull back. Great chart pattern. And again, we've not really got supporting. Volume is not great up there. We're coming up on lower volume. So I think you're just going to have to be patient with that one. That took quite a while. So we had a deep drop in New Year's Eve, Christmas Eve. Right. So we based here last week and then pinged up. So this is the impulsive wave. So we've had a 1, 2, 3 wave up here. You've got to, surely that's going to pull back somewhere into 220, 230. Or is it really that strong? I would not chase the market. I do not chase the market. Now Tesla, yeah, Tesla's new entry into the S&P, and the price earnings ratio is staggering, absolutely staggering. I can't remember the exact number, but it's just incredulous. So if sometime soon we come out the underside of that, if we can't hold this 850 and this starts to crumble under 800, then that spells that's going to hit the S&P. And look at the volume. We had this huge volume here on the 18th, and the volume is tailing off. So we're coming up on lower volume. Very divergent, very, very divergent. This is what makes me nervous about the US markets. Yeah, this is now a key component of the S&P. You're looking for 1200 on Alibaba, yeah. And Apple, yeah, let's look at Apple. Right, so we come off this main support at 127, but look at this area, look at this pink zone. If we pop back in this pink zone and ultimately pop out, then that spells trouble for the Nasdaq. So it's in the Dow, isn't it? It's in the Dow 30. So if this is 1, 2, 3, so at the moment that's a C wave pullback after a really nice wave pattern up. So so this 125 was a great place to get in. At the moment, pullbacks are still viable, but watch out, because if any time in the next days and weeks we close under 130, be careful. Again, we're coming up on lower volume. See, 1600, is that the earnings ratio of Tesla? Yeah, that's what makes sense. Let's take a look at, yes, these stocks. Square, they're a payments processor, aren't they? Payments system. So that's come from 39 to a high of 250. Like PayPal, right? Yeah, so same old story, coming up on lower volume. I just fear for the well, I don't fear for the markets. I just think that they are too frothy, and it is very hard to find value in the US. Very hard. I know, because I spent a long time scanning today. But the UK stocks are okay. Let's look at Amazon. Okay, I've had a pop today. This is a big box play. Huge box play. So we spent very little time on the up above 33.50. Very little time. Excuse me. Oops. No reason to sell. With a pop like that, there is a reason to buy on a pullback, but just be warned. Yeah, when this stock went up, you saw an increase in volume. We push up here, you see a reasonable increase in volume. But now, it just seems to me that yeah, maybe that's running out of steam. So watch the volume. You know, if we start getting a real tailing off in the volume, and this is still sitting up, just be warned. Stocks that come down on low sale volume are bullish. So we've got very little volume down here, and then you get a spike up in volume. but it's, yeah, it's frothy, very frothy. What else are we going to look at? LMND, thank you. Right. Take an update on your blink in a minute. If it's really bullish, it should hold 133. We're not far off 133 now. We've come down on volume though. Look at this. You know, we've come down with oh no, sorry, come down with. We saw an initial lot of huge amount of volume on that big drop. Based on what we're seeing on the volume and these 3 days of price, I think we're at least going to see 130, and we might go all the way back to 117. It's a really bullish chart, so maybe it'll close above 154 and ping up to 200 plus, but if you get a bad hair day and you see 130, 133, then that's at least worth trying on that one. Right, any other stocks you want me to look at? Gold still inching up. Let's have a look at the pound. Pound US dollar on the daily chart. This is really struggling. Really struggling. Let's take this off. That's pathetic. Let's take that off. It's just completely run out of steam, isn't it? This is what I talked about on the dollar. If that now subsequently closes underneath that, that's great for the Ftse. But would take the froth, potentially take the froth out of the US market. And we have come up. Volume is the theme of the day. We've come up on lower volume. So unless we get a big push, a big spike higher, this is done. This is potentially done. That euro is a decent amount of support. I think that amazes me is this chart here. This US dollar yen. Yes, US dollar yen is going nowhere at the moment. Well, it's been a sloppy chart for a long time. Ever since the COVID volatility, this is just not doing much at all. Now, as with the dollar index, we're just right. Ftse, yeah, let's Emerging markets, yeah, I have been looking at the emerging markets funds. Let's look at EM. I've got to go, so I'll just wind up quickly. Emerging markets ETF. Been on a huge run. The stronger dollar could really knock this off. This could be a bit of a frothy blow off here on the emerging markets, so be careful. I'll look at pound New Zealand in a minute. What was I going to look at? I was going to look at Euro CAD, because that's one we're following in the room. Yeah, okay, that's at the bottom of the box. Potentially about to drop out. Yeah, the oil's so strong. That was not able to cope with the strong oil. So if we close underneath this 153, we're going to see 150 pretty quick. Let's look at that. GBP NZD. Yeah, potential sell signal, isn't it? Been taking a long time to grind higher. So you would have thought that'll start to make its way back down to 186. In fact, I was looking at, been following this one, Aussie New Zealand. Yeah, I suggested this was going to go on a run, and it has done. Well, that's due a pullback as well. If that comes and sits on 107, that could get a leg up, back up to 110. Any currency for us? Right, let's have a look at the S&Ps. Dow's trickling off these highs, not leaping. Wow, that's... If that can hold up here, that's huge. Is that a new all-time high? It's a new all-time high. If that holds up there, that's incredibly bullish. Let's have a look at where the tech index is, Nasdaq. Oh, Nasdaq's climbed back up. Right, I've got to go as well, so I'll drop you a line with the Telegram room, and then we'll get that going. All right, thanks guys. Thank you very much for your company. The big scan is on Sunday at 6. If you've not got the link, go to the website and drop down on the home page. Drop down to these this page here, and then you'll find at the bottom of that page you will find the link. Right, I'll give you a chance to click on that. Make sure you're booked in for Sunday, and look forward to seeing you then. Enjoy the rest of your week, and thanks a lot for joining me. So click on that link now if you want it, because I'm just about to close the room. Thanks everybody. Anybody who's interested in day trading, then have a look at the, go to the Learning Centre and pop on the day trading link and have a look at that for day trading. Thank you very much, and see you soon. Bye.